Earlier this week, I made a video on the current state of the market, where I think a lot of sort of things are coming together right now that are quite concerning about the market. And one of the things that I pointed out in that video is something called a rising wedge pattern. That's purely a technical thing, but we received questions from a lot of people asking us whether we could elaborate, or I could elaborate a little bit more on that specific pattern. So I thought, hey, let's have a look at that and kind of elaborate a little bit more why the pattern works and what it's trying to tell us, and maybe show you also a little bit, how all over the market that the pattern is currently being perceived or can be seen at. So let me quickly flip this around, and first let's just have a quick look at what the pattern actually means. And right now you can see this, for example, here in the S&P 500. And what the pattern essentially is telling us or showing us is that the market is, I guess for the lack of a better term, kind of climbing higher in an ever smaller range. And as that range gets smaller and smaller, and it's gotten really, really tight over the past few days, there is a strong propensity for the move to result to the downside. So through the lens of investor psychology, basically what it's telling you is that there's less and less volatility as the market squeezes higher and people get complacent, so they're just buying without thinking. At least that's the way I interpret it. And so ultimately, the margin of error for the market becomes so small that a mean reversion move to the downside, or at least sideways to lower, becomes very, very likely. So having said that, let me just kind of show you where this pattern's showing up right now, or at least some of this pattern, because it's all over the place. And that's one of the big things that I always try to tell our clients. What you want to do is, when you find a pattern, whether that's fundamental analysis, through the lens of fundamental analysis, structural analysis, or in this case, technical, the more you see it in different places showing up, the more confirmation you should be getting. So let's have a look at this pattern. So here, for example, in the S&P 500. Now, we can go deeper, and one of the most clear ones to me is in the NASDAQ 100. Again, you can see this, ever so narrowing pattern where stocks have kind of been rising to the upside. Now, one thing that's particularly interesting at this juncture, and I'm going to flip over to the consumer discretionary sector, is where this is taking place. And on all the indices I showed you so far, it's showing up in the same place. So again here, this is the consumer discretionary sector of the S&P 500, the XLY ETF. You can see again that narrowing wedge, and it's all taking place as we've seen a marginal break to new highs. This holds true for this sector, holds true for the S&P, holds true for the NASDAQ 100, and many, many other parts of the market. Now, what we've seen so far already, at least in this one here most prominently, we've already seen a bit of a breakdown, an initial potential trigger for this to start mean reverting lower. Now, it's entirely possible we have a sideways move from here, but given where we are in the broader juncture and everything, I think the path of least resistance seems to be at least somewhat to the downside. Now, again, we can look at other parts of the market. We can look at individual stocks. Some of the stocks that I talked about the other day, in that special report, for example, UPS, you can look at this all through the lens of this repeatable rising wedge pattern. Some of these aren't as clearly drawn, but you can see it's the same type of idea. So there you have it, folks. That's our rising wedge pattern. Now, one of the things that we're doing here at the Study Trader and Blue Oak Advisors, in order to find actionable trade ideas, we are using our market rover, of course. So what the market rover is going to do, it's going to tell us which sectors are turning from bullish to neutral to bearish, and we've seen some of them start to make that move, although I think there's a lot more to go. And then ultimately, once we see that, within one click of the mouse, one click of, let's say, the sector, we then get all the stocks within that sector to give us an opportunity on the short side in this particular case. So they give us an opportunity for a signal to sell in this case of the rising wedge pattern. So anyway, if you're interested in the market rover, let us know. Leave a comment down below, or send us an email, support@steadytrade.com, and I'll see you guys soon.